Hey guys, it is a beautiful, beautiful day this Monday, May 24th. Time to start another week. Are you ready? It's a good day for crypto too. Wow, take a look at what's going on in the market. Market cap is up 16.5%. We're seeing a little bit of a recovery here. Bitcoin dominance 43.5%, Ethereum at 17.3% of the total market capitalization, and gas prices are not too high. Welcome to another episode of the Block Thrasher Daily Crypto Update, where we are simplifying crypto by shattering the complexities with news, commentary, analysis, and education. We always start off with the word of the day. Today's word is lacustrine. Lacustrine. I actually am sitting here just about a mile away, not too far, from Lake Conroe here in the Houston area, just north of Houston. And it has been hot and it has been humid, but it's also been raining a lot, which is nice. And the other day it was raining so hard. Sometimes it rains so crazy hard here that I was talking to my dad while driving. I literally felt like as I was just driving around the lake or near the lake, that the lake itself was being lifted up and just dumped on the surrounding area. I mean, the storms here are incredible. The amount of water that will come down sometimes, where like literally you'll just have 2 inches of water on the ground, boom, like that. I can't even imagine what it must have been like during Hurricane Harvey or any of the other hurricanes that just dumped. I think there was like 50 inches of rain in a couple of days. It's just insane. I'm sure you've seen the video before, or the news reports from back then. People literally standing on the roof of their house. Some of them even 2-story houses, waiting for a boat to come by and pick them up. It's just nuts. But I guess that's what happens when you have an area that is so close to the Gulf of Mexico, where the storms come in off the ocean and just pick up a whole bunch of water and dump a load of precipitation. Anyway, lacustrine is of or relating to a lake. So I am here in a lacustrine area. Lacustrine. All right, looking back to the market, what is happening here? Wow, Bitcoin is up 9.3% to 37,521. Ethereum seeing a very nice little boost here, up 20% in the last 24 hours to $2,418. Binance up 26% in the last 24, now at 310.22, and it is the current leader in this horse race to see who gets the most recovery, at least in the last 24 hours. Cardano up 21.3%. It is currently $1.48, and Cardano and Binance Coin, BNB, ADA and BNB have just been flipping back and forth over the last few hours, last night, early morning today. Dogecoin is up 9.1% in the last 24 to 32 cents. XRP up 15.9% to 85 cents. And Polkadot is up 14% to $20.30. And rounding out the top 10, Internet Computer is up 4.8%. I have not talked much about Internet Computer. I will sometime soon. It's been a little bit off my radar. And all I'm going to say right now is that when I bring my analysis to you, it's going to be mostly negative. It's a centralized system with problems. And that's about all I'm going to say for now. We'll dive into that sometime a little bit later. It saw this like flash pump with the initial release and with its listing on Coinbase. But is it sustainable? My thought would be not so much. All right, let's just take a look at the news quickly. Not going to spend a lot of time on any particular thing today. We'll just run through this really quickly. It seems like another one bites dust. And every few weeks or months, we see this repeating story where someone who was formerly a critic of Bitcoin or crypto talking FUD, calling it a scam, whatever it is, saying it has no use case, saying it's a Ponzi, saying it's got no intrinsic value, whatever, the typical FUD is, finally admitting that they had little knowledge about it, looked into it, did the research, and have now purchased. The latest is billionaire Ray Dalio, according to trustnodes.com. From Bitcoin basher to Bitcoin owner, Ray Dalio is the latest to join the ranks of U-turners, the most famous of whom, perhaps until now, was the French finance minister Bruno Le Maire. Just months ago, Dalio said the government will ban Bitcoin. This January, he revealed he actually didn't know much about Bitcoin at all. Surprise, surprise. So his asset management firm, Bridgewater Associates, started studying it. They have about 100 billion in assets under management. Their analysis, concluded that Bitcoin is like an option on a potential storehold of wealth. It wasn't clear, however, where their analysis was going to lead as far as their own funds are concerned, but a new hint of direction has arrived, with Dalio saying in an interview at Consensus, quote, "I have some Bitcoin." The interview is still to be aired, with it unclear just how much he has or when he bought them. But narratively, Dalio shares a lot with Bitcoiners in as far as he thinks that fiat money has been devalued for 500 years and has now entered its last phase. So it sounds like he has become a Bitcoiner, with it to be seen whether what some call the world's largest hedge fund is to join in diversifying to digital assets as a hedge against inflation. And so this is interesting because this is also what happens is you have these billionaire investors, right? Hedge funds, institutional banks who say all this crap about Bitcoin. And it's always said about Bitcoin at the moment because Bitcoin is what they're aware of. It's what they know. I mean, they're aware of it from the standpoint of they know it exists, but then, even Dalio here admitting, yeah, we didn't really know much. We know very little about Bitcoin, but we're talking all this crap about it. But then what happens is they start to research and they look into it and they do some actual analysis into the technology, into the economics of it, and realize that it actually is a useful store of value, right? So then they flip, but here's where I'm going with this. What happens is, in the beginning, it's just about Bitcoin. It's about Bitcoin, it's about Bitcoin. And then all of a sudden, as they get deeper into it and they get more informed and they do more analysis, they start to realize that Bitcoin is not the only game in town, right? I mean, looking at the cryptocurrency market currently, right now, Bitcoin is 43.5% of the market. So it's less than half. Yes, it's dominant. Yes, it's huge, right? Currently at $700 billion out of a total market capitalization of 1.6. But we are starting to see Ethereum increase in its level of dominance now at 17.3, and we've seen it as high as 20%. So what I'm seeing happens is suddenly they start to realize, oh, Bitcoin may not even be superior or dominant forever. Of course, the Bitcoiners and the Bitcoin maximalists are all getting pissed off right now at me because they are so religious, essentially, about their belief that it's only Bitcoin. Never mind the fact that there's all this evidence to say and reason to believe that Bitcoin can be flipped one day. And here's another example of it. So Goldman Sachs, just like Dalio, at one point in time, talking trash, talking FUD, finally coming around, biting the dust, getting on board. But now, what are they saying? 1.3 trillion crypto price crash. Leaked. Goldman Sachs prediction gives high chance Ethereum will eclipse Bitcoin. Now, here's what's funny to watch about this is it's as if they're just slowly waking up, slowly becoming aware of what's going on. And so the progression is no Bitcoiner, no Bitcoin, no crypto. Okay, yeah, Bitcoin. Oh, whoa, Ethereum might eclipse Bitcoin. You know what the next step is? The next step is to actually do the analysis and go, oh, there's a lot of things that might eclipse Ethereum, right? And this is just, we've talked about a lot on this, but so here's what they said. A leaked report from Wall Street giant Goldman Sachs has given Ethereum the second largest cryptocurrency with a market capitalization of around 250 billion compared to Bitcoin's 660 billion. It's interesting how quickly that can change because now we're at 280 and 700 billion instead, just in a matter of hours. Welcome to crypto. They said that Ethereum has a high chance of overtaking Bitcoin as a dominant store of value, calling it the Amazon, the quote, Amazon of information. Given the importance of real uses in determining the store of value, Ether has a high chance of overtaking Bitcoin as a dominant store of value. Analyst at Goldman Sachs wrote, according to, so here's the thing. This is just an analyst, right? What this means is this is one person. It's not like Goldman Sachs has pulled all their analysts together and come to this conclusion as an entity. But anyway, that's just an aside. Moving on with this story. The soaring popularity of so-called decentralized finance using cryptocurrency technology to recreate traditional financial instruments such as loans and interest and designed to replace the role of banks with blockchain-based protocols has helped Ethereum surge over the last year. Non-fungible tokens largely issued on Ethereum's blockchain to digitalize art and collectibles have added another use case. Quote, the Ethereum ecosystem supports smart contracts and provides a way to create new applications on its platform, said the Goldman Sachs analyst. He continues, most decentralized finance DeFi applications are being built on Ethereum, on the Ethereum network, and most non-fungible NFT tokens issued are purchased using Ether. The great number of transactions in Ether versus Bitcoin reflects this dominance. Yes, so I agree with these guys. This analyst, it's right. They're right in the core thought that there is nothing that Bitcoin does that can't be done by Ethereum or another crypto. In fact, it has a number of advantages. Any proof of stake system is so much more environmentally friendly, and it has the ability of programmability money, of smart contracts, of decentralized apps, of DeFi. So let's take it to the next step, though, which they do not do here, right? If it is true, as they're proposing, that at the end of the day, on a long-term horizon, the winner is going to be the platform, the crypto with the best use cases. Currently, use case being store of value, being used as a currency for transactions, for payments, programmability, smart contracts, DeFi, NFTs, all of these things, then one would naturally conclude that whichever system is able to do all of those things best, right? Also be deflationary, so with a limited supply, well distributed. I mean, we can go on and on, but the argument essentially being that if you're investing on a long-term horizon and the game that you want to play is to be in the project or projects which can best outperform and potentially flip Bitcoin, and you do agree with their premise, then it actually isn't necessarily Ethereum. Yeah, it might be Ethereum, but see, here's the thing is even with Ethereum's 2.0 upgrade, it's going to be inferior to a lot of projects, some of which are very close, either in the top 10 or in the top 20. Cardano, Polkadot, Stellar, Polygon, Solana. And this is one of the most exciting things to watch in the cryptocurrency space is this battle. And it is a battle of innovation. It's a technological revolution on the one hand, but it's also this battle of innovation. And it's a battle of innovation mixed with a battle for market share, for network effect, for users, for people is what it's about. So here's the thing. It isn't always the best technology that wins. Many examples throughout history of a technology that was superior but lost. Why? Because they didn't also have the ability to win people over to use that technology. So this is my analysis. When looking at the macro, big picture of everything, and you really want to win moving forward, find the crypto that has the ability to be a store of value like Bitcoin. And here's something. Let's talk about that issue for just a second with me. Follow through with this with me, friends. Okay, Bitcoin has an advantage in that it has a very low supply. It has an advantage in that it was early mover. But here's the thing. Bitcoin's distribution isn't necessarily the greatest because there were a bunch of people that got in really early who are whales, right? So that's an issue. Also, all Bitcoin has is number go up. If you hold Bitcoin, you're just waiting for the number to go up. Now, could you earn some kind of interest or return by putting it into a centralized service that gives you interest like BlockFi or Celsius or something? Yes. But it's just to hold. That's what you do. It's a store of value. Pretty much that's it. And that means that at any given point in time, it has almost total liquidity in that people can just, you can just dump it. I mean, you have no incentive to hold it other than number go up, right? Which isn't a bad incentive because it will go up. Historically speaking, when you zoom out and you look at 4-year periods, you're going to well outperform every other asset class out there if you hold Bitcoin, and you're going to do phenomenally well, and that's great. But the proof of stake systems, right? Okay. Let's compare that to proof of stake, where you're incentivized to hold it for the same exact reason. Number go up. As a limited supply, as it grows in use and as it grows in adoption, number's going to go up. So you hold it, but you also stake it. And so when looking at these proof of stake projects like Ethereum even, which, well, it's not yet, but when it becomes, the question then becomes, well, how much is locked up in staking? And this is a significant factor too. See, because people that are staking, that are earning interest, are much less likely to trade with it. They're not trading with it. And so that percentage, and with some of them, it's like 70%. Cardano is 70%, I believe, of the supplies is locked up in staking, or not locked up, but it's being staked, right? Which helps secure the network. But here's the other side of that. That's very important to me. People talk about the halving schedule of Bitcoin and, how that affects the prices and whatnot. And that, that's a factor. But here's the thing. All the new Bitcoin that comes into existence is very centralized because it's in a few hands. It's in the hands of the miners. And the entry level into mining is not low. It requires a lot of hardware, knowledge, capability, and low electricity fee, right? So you can't just go out and start mining significant amounts of Bitcoin. Whereas with proof of stake, the network is secured through staking, which anyone can do with very low amounts in some of the systems, not in all of them. In some of them, like with Ethereum, you actually, if you want to run your own staking node in a decentralized way, you have to have 32 Ethereum, which is cost prohibitive for a lot of people. But that's not the case with some of the others, Cardano and Polkadot and And so you see this also, this aspect of staking creates scarcity, right? So Bitcoin has its scarcity solely from its limited supply. And it's, that difficulty in creating, new Bitcoin. It's a low emission rate, right? But some of the other proof of stake systems, there's this built-in scarcity, and it's not absolute because obviously anybody can unstake and it's liquid, but there's this incentivization to keep it staked because you're earning a nice interest, right? So you're not only benefiting from number go up of your holdings, but you're benefiting from number go up of the new holdings that you're constantly earning moving forward. And that's something that's difficult to factor in, but it's important. So for instance, you're earning, let's say, 6% holding Cardano. Well, today it's $1.40, but tomorrow it might be $2.40. So today you run the analysis and you're like, oh yeah, I'm making X amount every day through staking, but it could end up being double that or 10 times that or 100 times that moving forward, right? And that's where people get tripped up. I know I have in the past, where it became increasingly clear, even as a miner, because I was mining Ethereum back in the day, that in the moment it didn't seem very profitable because the electricity was expensive and you run all the analysis and you're like, I'm barely making anything here. But that's when Ethereum was $200 and now it's $2,400. So if you had the ability to look out on the long-term horizon, it would have been, readily apparent that it was profitable, incredibly profitable. And so the same holds true with staking, which is like a form of mining without hardware, which is beautiful because anybody can get into it. A lot of people have wanted to get into Bitcoin mining. What do I do? Giving up. It's too expensive. It's too difficult. It's too noisy. It creates too much heat. My electricity costs too much. Blah, 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 blah. It's the beauty of proof of stake. You can essentially mine without any of that, right? All right. Man, I got off on a tirade there. Where was I going with that? Oh, with this Goldman Sachs story that their analysis is now that Ethereum could flip with Bitcoin. All right, moving on. We got more news. Listen, one of the major points that I've been making over the last few days, when we've seen since the 19th of May this crash in the market, is that the whales would come in and buy this dip. And here's more evidence to that fact. ARK Invest buys 20 million Bitcoin. The hedge fund focused on innovative developments has bought 19,872,939 worth of Bitcoin. I don't know what Bitcoin is. Might be tasty though. According to a filing with the Securities and Exchange Commission. Awesome. Also, users massively withdraw Bitcoin from exchanges while Bitcoin deposits hit 4-month low. This is bullish. Charts created by popular analyst provider Glassnode show that users now prefer to sit tight on their Bitcoin and hold it in cold storage vaults instead of depositing it to exchanges to sell. Besides, the number of users on the Bitcoin network is growing as co-coiners are buying the dip. Bitcoin withdrawals from exchanges surging. Bitcoin deposits hit another low. All right, they just repeat the same thing over and over again. Let's make a story out of one simple fact and go on and on about it. The point here is that the analysis, on-chain analysis from Glassnode is showing that people are not sending crypto to the exchanges to sell. Willy Woo, looking at that same data, the fact that cryptocurrency exchange outflows have over the last few days, after the prices of most cryptocurrencies plunged in a market crash that saw the total market capitalization of space drop from 2.2 trillion to 1.5 trillion. The on-chain analyst Willy Woo has pointed out user growth on the network suggests the bull market hasn't been affected. Data shared by the analyst revealed user growth on the Bitcoin network has surged as no coiners were taking advantage of the price drop to buy Bitcoin. So no coiners like Dalio, right? People who, if you're not familiar with the term no coiners, just people who were previously not part of the Bitcoin network. This is being seen by, as Wu's pointing out, the creation of new addresses, right? Which gives us a clue, an indication, not absolute guarantee, but an indication that these are new people coming in and buying this dip. Per his words, the bull market is very much intact. And I agree with that. Absolutely agree with that. I think this was a shakeup to shake out the weak retail hands. It's a game that's played by institutionals, by bulls regularly. They don't even have to dump that large of a position of their position when they want to purchase. Look at Dalio. He's a good example. Talking FUD, and then the fact of the matter is he's been buying. And this is what they do. They dump it. The retail little guys panic. I've seen this repeating story since I've been around the market, and since about 2013 and more heavily in 2016, over and over again. So don't succumb. Don't succumb to the ploy. HODL, be strong, steadfast. As Charles Hoskinson was saying, offering some advice on how to survive this crypto crash, he stated, be mindful. Mindfulness. Drawing on his experience of running a multi-billion-dollar firm, Hoskinson points to mindfulness as the key to get through these difficult times. The events of the past week or so were a real wake-up call for anyone with a vested interest in crypto. FUD, driven by threats from China, Elon Musk, and U.S. regulatory concerns, has conspired to crash the market. Just a week and a half ago, crypto markets were riding high as the total crypto market cap hit $2.5 trillion for the first time. But FUD event after FUD event saw things take a turn for the worst. The local bottom hit on Sunday, and the market bounced at $1.3 trillion, making a staggering 48% loss in value across the board. While some tokens fared better than others, with Polygon and Maker showing signs of fight, the losses of the last few days have taken their toll. The upshot to this has seen fear, anger, and panic. This has only been exacerbated by the crypto haters relishing this crash, which is so true. It's like, Bitcoin's down 20%, let's pile in. It's dead, it's over. You know, again, another recurring theme. Binance CEO Changpeng Zhao retweeted a message he posted on February when markets were going up to remind us that critical common sense rules apply equally during a downturn. This is what Changpeng said. Stay calm, do proper risk management, diversify a bit, only invest with money you don't need urgently. Don't invest with your next month's rent. Good advice. Expect some system issues. Don't fall for scams. Be responsible too and take responsibility of yourself. Safe it. Yeah, it's all good advice. The people that are getting really hurt, and you know, it's almost a good thing, but the people that are getting really hurt are the get rich quick, arrogant minded people that are like, I'm going to come in and I'm going to buy Doge and I'm going to buy Safe Coin and Moon Coin, whatever the current Shiba Inu meme coin is. And then they're like, what the hell's going on with crypto, guys? I'm down 50%, you know? And the veterans, the Hoskinsons and the Xiao and the, you know, people like myself that have been around a long time, it's like, no, don't worry about this. Be an investor with a longer term horizon. You know, the big downturns, the 30% and the 40%, They're part and parcel of, they're the price you pay to be in an asset. Like Michael Saylor said, that is 10x outperformed by 10, order of magnitude 10. I think it was one of the indexes, Dow Jones Industrial, whatever it is, right? And we get the 30% gains, just, you know, and it's not, it's the same happens in the upward movement. Like, look right now, Binance coin is up 32%. And of course, you know, we get excited and we get happy about that and we get exuberant about that. And that's awesome. But that's just what happens. That's why we talk about it being a volatile space. So what I'm trying to say, and I'm trying to say in different ways, because I'm hoping it gets through to everybody, is you got to take, if you want those crazy gains that you see in crypto, 100%, 1,000%, and more gains, you got to take the down with it, right? Now, for people that just got in, for the newcomers, that's rough, especially if you bought at the all-time high, which is not wise. You should have been buying this Sunday, yesterday, at about 5 to 7 a.m. You know, and that brings up another good point I'm just going to touch on really quickly. If you're sitting on some cash and you're looking to buy, historically speaking, the best time to buy is Saturday, Sunday, preferably Sunday, usually Sunday morning, sometime early, depending on where you are obviously located. Sometimes that rolls into Monday. In fact, the fact that we see the market recovering and prices up right now on Monday, early Monday morning, is a very good sign for this week, in my view. If we look at history. Now, again, just because something happened before doesn't mean that it's going to happen again. But it does mean that there's more likelihood, and this is a repeating pattern that is observable. So you can use that. Man, if you were looking, I've been watching Elrond Gold, one of my favorite projects. You know, down from 240 at the all-time high, it hit $72 early Sunday morning. That, I said to my girl, hey, you've been asking me, when's the time? This is the time to buy. That was the time to buy, right there. Time to buy. And that's what actually provides opportunity here in this space, is the volatility. Because if you're patient and you're calm and you are mindful and you control your emotions and you just think analytically, you wait and you buy on those downturns. You don't buy at the all-time high. And if you're planning on selling, you sell at an all-time high. See, that's the thing. Instead of being reactionary and emotional, dumping because the market's dumping, or buying because the market's going up like crazy and on fire, right? Following the crowd, you're going to get ruined that way. You do the opposite. You be contrarian. When everybody's panicking, when everybody's in fear, you buy. And when everybody's exuberant and going to the moon, if you are already planned to sell for some reason because you need money or you're going to invest in another asset like property, real estate, maybe you want to diversify into some other commodities that you think are going to be good hedges against inflation, gold or silver, whatever it is, then you sit there and you look for a new all-time high, you know, in the course of a week or month or whatever it is, whatever your time frame is, and that's when you sell. Big picture macro strategy for you there. All right, friends, I hope you have a phenomenal day. It's been fun, as always. It's exciting to see this turnaround. Obviously, pushing with you. I think we all are, hoping that this continues and we see this bull resume sooner than later. Could take some time or it could happen very, very quickly. Again, if we look back to 2013 when the same thing happened, 2017, it took a long time. 2013, not as much. Things are looking more like 2013, plus it's a totally different environment now. We've got these institutional people that have just insane amounts of capital available to them where they can come in and buy these dips. And the evidence is showing that they are. And obviously, the level of adoption and just the sheer numbers we're talking about, where the total market capitalization is at now, is a completely different thing. All right, friends. Appreciate you. I'm glad you're hanging with me here for the podcast. Gonna be here again tomorrow. Look forward to spending some time with you. Be sure to go to blockthrasher.com and sign up for an account there. Going to be releasing more and more content as we move forward. Look for us on the Facebook group if you want. Appreciate follows on Twitter. Spread the word. Have a great day. Talk to you soon. See you tomorrow. Love y'all. Bye now.